What's up, replayers? If you are not following me on Twitter, please do. What's up? What's up? Where are my pip killers at? Pip killers, where you at? Pip killers, where you at? What's up? What's up? If you guys are not following me on Twitter, gotta follow me on Twitter, guys. All of the replays and updates are on Twitter for the scopes that we do. What's up? How are you guys doing tonight? How is everybody? It's taking a while for people to get in the room, huh? It's taking a while because it's a Saturday night. Everybody's partying, I guess. Is everybody partying? I am awesome. I am awesome. Thank you for asking. You guys getting okay reception? All good? All good, all good? Alright, you guys ready for your eyes to be opened tonight? Thank you for the shares, guys. Thank you for the shares. Ready, ready. Good. Pen and paper out. Pen and paper out. We're going to discuss the Venn diagram that we started yesterday and this morning. But we first talked about it yesterday, and the reason why I wanted you guys to make that Venn diagram is because you have to have an understanding of exactly why trading is important to you, exactly how you're going to approach it. You need to have the game plan down. So, how do we understand both ourselves, all right, and what we want and what we want to get out of life and what our goals are, in addition to how trading fits in with that, okay? Because there are many ways that we could make money. The wealthy plug. I keep picturing that pug, man. What's up? There are so many ways to make money, so why trading? Why? Well, the fact of the matter is that if you have a winning strategy with trading, the amount of money that you can make based upon leverage is not only undeniable, but will greatly exceed what you can make with any job. Getting the winning strategy, of course, is the difficult part, right? Now, what I wanted you guys to do was to make a Venn diagram. It's just very simple, okay? But the simple things will help us in terms of how exactly we go about approaching trading, approaching how it fits into our lives, our lifestyle. You know, one of the major themes with FX Prime and with the membership site, sure. Venn diagram is basically 3 circles. And what we're attempting to do is to look where all those circles overlap. I'll get into the lesson in a second, but I really want to give kind of a background of why we're doing it, okay? So basically, the thing with FX Prime is I wanted to give people a way to tag along a winning trader, you know, every single day and actually make profits as they began to learn Forex. Now, the difference is there's a lot of Forex programs out there. There's a lot of Forex mentors. And all of the Forex programs and mentors focus on one thing, and that is education. Now, even with the most direct education, if I could distill everything I know and everything I've learned over the past 10 years trading into a single program, it's still going to take you months to actually understand what the hell it means, right? Thank you, Scott, for inviting. So there's always a gap in time between when you get information and when you're able to apply it. Okay, it doesn't matter where you're getting the information from, even if that information is distilled, which is the whole point of like a program, right? The whole point of a program is that all of the nonsense information, right? Because it took me 10 years, Jose, and I was very ambitious, and I still am very ambitious. I get more ambitious every single day, but it's still there's such a depth of knowledge involved with finance in general. There are so many different parts of finance that you can become an expert in. I mean, if you just look at the instruments alone, you've got bonds, you've got equities, you've got options, you've got Forex, okay? You know, you've got multiple, you've got futures, you've got multiple subdivisions within each of those instruments. So technically speaking, there are traders that are not only just focused on the futures or Forex markets, all right, in terms of instruments, but then there are actually people who are in a subdivision of that and focus, thanks April for the invite, and focus on just a subdivision of those instruments and markets. So because there's so much to learn, there's this huge gap between when you actually learn and when you can actually apply it and make money off of it. And that's why I invented FX Prime, to give newbies a way to follow along in my footsteps as Prime takes the trades and make money while they learn, okay? Now, there is really no other way to make money in Forex while you learn. It's literally such a deep market with so many intelligent players that if you try to go into it, and everybody wants to go into it because they want to make money, and it's possible to make money. But we've gone over this before. The statistics say that the majority of people making money are making extremely large amounts of money, and they are a vast minority. They are 1 to 3% straight across the board. Only 1 to 3% of Forex traders actually win to the point of where they make a complete living off of it. Proceed as if success is inevitable. That's the mantra. We have many mantras in this room. So that's where we're at. What is Forex? It is the foreign exchange markets. If you're that new, babypips.com is an excellent resource where you can just kind of get your foot in the water and test to see the knowledge involved with foreign exchange. Foreign exchange is nothing, it's not something that is scary, it is not something that is dangerous or risky or anything like that. Foreign exchange happens every single second of every single day around the world. Even if the Forex markets aren't open to retail, there is some bank somewhere exchanging currency with another bank somewhere else. Okay, every company is involved in Forex exchange. Yes, hustling every day doesn't necessarily mean active though. All right, there's a difference between activity and work. All right, being active and getting work done are two different things. We'll explain that as well. But remind me, Jose, to come back to that. When it comes to what foreign exchange is, every single day there are companies that have to exchange one currency for another to get business done. Every single day. Every single day. So we are just utilizing a market that is already there, that players are already going to be exchanging very large amounts of currency. We're not talking about billions or tens of billions or hundreds of billions. We're talking about trillions of dollars literally exchanged every single day in this market. All right? Forex makes every other market look small. Okay? And because of that liquidity, it's one of the easiest markets to trade if you have a profitable strategy, because you can leverage up very easily. There's a lot of liquidity. You don't have to worry about not getting into a trade or not getting out of a trade. So there's so many pluses to Forex, especially when it comes to a beginner and learning how markets work. Now, tonight, what are we discussing? the Venn diagram. You should have made one regarding your life, okay? Regarding what you as a person wanted. And there were 3 areas personally that I wanted you to write down. The first was what you're good at, okay? The second was what the market needs. And then the third is what is going to get you paid, okay? Now those are the 3 different circles. And in those circles I told you to make lists. And then find where they overlap. Okay? You find where they overlap, and what this does is it gives you an idea of your individual strengths, okay? Of your individual goals, of what you're trying to get after. But now tonight we're going to do it from a trading point of view. Okay? And we're going to explain things from a trading point of view. So this way you guys can get an idea of why we're actually having a mindset change before we actually learn all the details of trading, so to speak. Okay? The mindset change has to be there. You have to know why you're doing this. You have to know what the possibilities are. You have to know exactly how much money can be made. You have to start visualizing these things, and you have to get an idea, a quantitative idea of what it takes to actually achieve them. So let's talk about the first one. Okay? What does the market need? Supply and demand. What does the market need? Well, you have to know that all currencies get printed, and all currencies are currently getting inflated, right? Everybody knows that. If you follow this scope, you know the basic economic spiel that I talk about every single day. Inflation is occurring. It's gonna occur every single day from here forward, okay? Until there is a systematic currency reset, so to speak. So what is needed in that market? Well, if the markets were not free and open, all that money would flow to banks. But the banks need ways of getting the money into the hands of people, okay? That's how the inflation is actually created. It's actually necessary, though. So when players come into the market, especially retail players like us, but also institutional players, it's a way of spreading the currency, okay? It's a way of divvying out the currency to the most intelligent people in the world. That's essentially what it is, okay? Now, intelligence does not mean, I'm not talking about an IQ, although there are things that we're going to discuss in the member area that are telltale intellectual signs of being a good trader. I'm going to make a video about that, and you guys really need to look out for that video, because it goes into a lot of very interesting quirks that successful traders have. But essentially, if you look at it from the point of view of central banks need to get the money into circulation. Now they do that through the creation of loans, okay? And then they also do that through market injections, where they actually literally place money into the market. They inject money into businesses through loans, but also through the currencies in the markets themselves. Bank of Japan does this all the time. China does it all the time. They literally just inject money into the market and basically add money to the balance sheets of banks. It just gets created out of nowhere. And then those banks go and take risk with that money in the market. Now, if the banks won everything, then obviously there would be no exchange of wealth, which does happen to a degree. The 1%, the so-called 1%, is a running theme throughout all of our society, right? Everybody was downing the 1%, 1%, 1%. But the fact of the matter is that the 1% are the 1% because they have some type of money gathering system. Okay, they've mastered some aspect of the markets. Right? They didn't get there because they were born into it. Did you know that literally 90% of all millionaires in the US are self-made? 90%. Think about that. 90% are first-generation millionaires and self-made. It's only 10% of millionaires that actually inherited money. Right. But see, therein lies the issue, is that can wealth be created? All right? Because wealth itself is just a currency exchange. So the creation of wealth is nothing more than actually getting currency to siphon into your bank account somehow, some way, right? So you can create value, and value is a wealth exchange. You can get paid for your value, whatever that is. You can get paid for a multitude of things. But the fact of the matter is that the wealth is already out there. It just has to be captured. The currency is flowing into the money supply every single day. It just has to get captured by us, if that makes sense. And contrary to popular belief, money is not infinite. Money is not infinite. It is not. Abundance is not infinite. It can actually be quantified. If you're talking about currency, there is a definite quantity of currency in the market every single day. It increases every single day because more and more debt is created every single day through the process of loan origination, right? So, we could think, oh, there's just this infinite amount of money that's ready to be taken. No, it's not true. There is not an infinite amount of money. It takes work to get it, and the resources that accumulate wealth are always finite. They're always finite. And so that is the truth, okay? And the people that understand what the truth is are the ones that are actually getting the money. All right? So what does the market need? The market needs to spread wealth. Literally, it needs to get the currency into the supply, into the money supply. It needs to get the currency into the hands of citizens around the nation, for every single nation that uses a certain particular currency. Okay? That is what's needed by the market. It's needed. It's needed. It is not something that would happen without free markets. Okay? Otherwise we would have the royalty taking all of the currency, and then everybody would be peasants. Yes, correct. That's essentially part of the process. Central banks do originate the currency, and what they do is they attempt to capture the ideas, the work, the value that the citizens put out. Now the system is a bit jaded in terms of that sounds pretty screwed up. But what you need to look at is that the system is the system. It is what it is right now, right? Until every single person in a society is educated on financial economics, all right, and econometrics and macroeconomics, there will not be a change, because most people, I can assure you, don't even know how to balance a checkbook these days. And that's sad. That's really, really sad. Exactly. Ash, what up? Well, in a way, currency is supply and demand. But the problem is there's always more demand than supply, because the demand that is created through debt. All right, does that make sense? It is supply and demand, but there's always more demand than supply, because when the central bank injects money into a given society, no problem, Ash. When the central bank injects that money, it does so through a loan, and every loan has interest attached to it, and the money to pay the interest can only be gotten from the more money being printed. So there's always more demand than supply when it comes to currency. But the price movement is in relation to other currencies. Right, well it's not even a matter of want. It's a matter of need if you have to service the debt, right? So that's the point, is that yes, people want, because what do they want to do? They want to buy things, right? That's the whole economy. That's the cycle of the economy. But every time you buy something, rarely do people buy things in complete cash with no debt. Right, it's a cycle. So the inflation has to continue. It will continue forever. It's the reason why bread costs, probably $1 in the 50s, right? And now the price of bread has risen. Well, it's not the price of bread that has risen. It's the value of the currency that has gone down. Does that make sense? The price of bread might relatively be about the same if you adjust it for the inflation. But in terms of the value of each dollar, that's what has decreased. And therefore, it takes more dollars to buy a loaf of bread. So that's just basic economic stuff. But the fact of the matter is that the market needs to get currency into the hands of people. And free markets, just like the foreign exchange markets, are one of the ways that is done. Credit cards coming in. Yeah, Jose, you'll always need a credit card. You will always need a credit card, no matter how much money you have. There's a famous billionaire who has an American Express Black Card, and he just bought one of the most, actually I think it was the most expensive painting on a credit card ever. So he's in the Guinness Book of World Records. I forgot how many millions of dollars the painting was, but he charged it on his American Express Black Card. It was over $10 million. And the points that he got from his Black Card, he bought his entire family frequent flyer miles for their entire lives so they could travel. So he literally is traveling for the rest of his life with his family for basically free. That's how many points he got off that purchase. But essentially, you will always need a credit card because if you're smart, you're going to make use of the float between paying the credit card and buying the transaction. Yeah, Jose, that's the issue there is not the credit card. The issue there is your cash flow. So we just need to increase the cash flow and then the credit card won't be an issue. Does that make sense? Because people that make large amounts of money understand that with every credit card transaction, there's essentially a 30-day float period where you don't have to pay the credit card. And if you're making a lot of money, 30 days from now, you'll have a lot more money than you have now, right? So a credit card can give you leverage, especially as a business owner. That's called float. That's called credit float. Is a credit crisis coming? There already is a credit crisis. There already is a lot of people reeling in credit, trying to decrease the amount of debt that they have. So essentially, we are already in a credit crisis. We never left the credit crisis. It's just been covered up. So that's the first aspect. The next aspect, this is when it comes to trading, not you personally. All right, when it comes to trading, we know that the market needs money to change hands. It has to function that way. There is no economy if money is not constantly exchanging hands, okay? Does that make sense? The money must exchange hands for there to be a working economy. So traders and speculators do provide a service in terms of that because, well, it's one of the quickest ways to get money, right, into the hands of people besides loan origination. But also, there are traders that do beat the banks. And in that case, we essentially even out the yin and the yang, the power in the universe of the markets. What's up, DS? The second aspect is, what are you good at? When you approach trading, you need to sit down with a pen and paper, all right, a notepad. I have Post-its all over my desk that I have to organize and put into digital format tonight. Because all week long, I'll write down ideas. And just as they come to me, I write them down and take notes on those ideas. you need to be upfront with yourself and realize that you probably have skills that other people don't have. It may be artistic, it may be logical, it may be, you know, logical in terms of math, artistic in terms of the ability to recognize patterns. And whatever those strengths are, you need to start using them in trading, okay? So if you're a person that has very good visual recognition, okay, meaning you can identify patterns, and there are tests for this, and you guys that are members in the back end is going to be on fire. When I make this video, it's going to change the way you look at everything, okay? Because we're going to talk about a lot of the characteristics of winning traders, okay, and what those little quirks or abilities are. Yes, guys, thank you for the hearts. Thank you for the invites. As I said, the more that we grow, the more time I will put into this and the more information I'll give you guys. Thank you, Heart Mind. Heart Mind Money doesn't sleep. That's exactly right. So you need to be honest with yourself and really delve into what your strengths are and how you can possibly use that in trading. If you're extremely good at math, then you're going to want to look at quantitative analysis. That's good. And guys, understand that hard work is not necessarily a thing that people are good at. Okay, everybody's willing to work hard in this realm of trading. That's why everybody is here, right? That's why everybody's looking at this scope. Because everybody here wants more than the 9-to-5 type salary, right? Even if you give some people a six-figure salary, they may not be content with that. And most traders are not. Most traders are of the mindset that they want to make more. They feel they're worth more. Okay? And that's one of the aspects of trading. You know, hard work is not necessarily an advantage in this because everybody's working hard. It's the skills that you build from working hard that are the advantage. Skills are the advantage. You know what? Let me just show you something. Let me show you something. How many people on here, just by use of your comments, how many of you guys follow Gary V? Gary Vaynerchuk. I want you to listen to this. I want you to listen to this because it will probably be the best 15 seconds of your entire day to let you know how millionaires think. Okay? How millionaires think. Alright? Keep in mind, this guy started a wine business that was making $60 million a year. Alright? Alright, hold on. Let me just restart it. Alright, you guys ready? Listen to this. Listen to this. Let me see if I can find it. Alright.
Understand there are very basic things that need to get done to win. One, play your game. Always be on the offense for what matters to you. And two, realize that if you do not have a skill, if you do not have skills, you don't deserve to build a business. You can't just read about it. You can't just listen to podcasts about it. You can't just be about it. You gotta have fucking skills. Understand there are...
Did you guys hear that? I don't know how muffled it would be. You can't just read about it. You can't just be about it. You can't just think about it. You got to have skills. Otherwise, you don't deserve to build a business. You don't deserve to be a leader. You don't deserve to be a teacher. You don't deserve to make money. It's the skills that get that. It's the skills that come first. Right? So the key is, Jose, you can go to his page. It's It's like the third post back on Gary V's page. At Gary V. Garyvee. He's all over the internet. You can't miss him. So, what are you good at? What are your skills? What are your skills? How can you apply them to trading? Are you good with organization? Are you good with analysis? What type of analysis? Quantitative, technical, fundamental? How do you apply it? Because the skills at the end of the day are the only thing that get money. Skills. It's all skills. It's all skills. Now, ideally, you want skills that are very valuable, right? So, what I am imploring you to do is to sit down and take inventory of your skills. And if you don't have anything to write down, then you need to get something to write down. You need to put all of your energy into developing a skill that has a very high demand, okay? Whatever that skill is. And especially if it's in trading, you need to have a single skill first before you develop multiple skills, right? Right, marketing yourself is a skill. Not necessarily good with trading, you know what I mean? It's not really going to help you trade. But it's a skill. So that's what that circle is about. It's about taking inventory of yourself, of what you have to offer, of what you're good at what, not just what you're good at, of what you're great at. You can't just be good. You can't just be good is not enough. You have to be the top 10% of that thing, whatever that thing is. You know what I mean? What is that thing? Right, but helping others really is just what? You've got a skill that they need, right? You've got some skill that they need. And if they want and need it, then that's really good. Because if someone wants and needs something, it's a high demand skill. So when you do this inventory and you take inventory of yourself, be honest with yourself. It's okay if you're a young guy and you've got no skills yet, that's fine. I didn't have skills when I was young either. But I'm telling you the truth in terms of this is distilling the real stuff. This is a complete distillation of what works, of what's important, what has value. And it's the very reason why people can go through 4 years of college and then not make money when they graduate. Because reading and knowledge don't necessarily translate to a skill. Skills have to be learned. Skills have to be perfected. Skills have to be acquired in the trenches. You could teach someone trading out of a book all you want. All you want. Books, videos. If they never place trades, they are not a trader. And that was my big beef with, these mentors that come online and you don't see them placing a single trade. Even if they didn't place the trade, even if they just said go long here, go short here, there's no record of these guys even doing that. You know what I mean? And especially live. Most of them don't even do it on video, let alone live. Cool, Calvin. That's called mirroring. So mirroring, yes, that's a skill. If you have the ability to mirror, that means that you're probably really good with research. And you can research how successful people do things. But that's the whole point in this, is that if you don't have skin in the game, you are not a trader. You're not. You're trying to become a trader, or you're learning about it, but until you have skin in the game, you're not there yet. Baba too bad. I like that. That just rolls off the tongue. All right, so that's the second aspect. The first aspect is realizing that the market needs Forex. Companies do, countries do, central banks need Forex. All of them need Forex. They all need foreign exchange to occur on a daily basis. They need to get currency moving around the world, and they need to get currency injected into the supply. Okay, so Forex does serve a purpose. Second is sitting down and realizing what your skills are, your unique skills. Okay? Can you become in the top 10% of every single person you know at that skill? And all the people that you don't know. If you were to go to a seminar about trading, all right, and let's say the room is filled with 1,000 traders, could you technically be in the top 10% of any one thing? Because that's how you make the money. If you're in that top 10% of the one thing of knowledge, whatever it is for you. And next is, what will get you paid? Sounds simple, right? What gets you paid in Forex? Let's see some guesses here. What gets you paid in Forex? What gets you paid? Let's see if you guys have been listening all day today of my rants. Pips. Strategy. Absolutely, Scott. Knowledge does not get you paid. Strategy, strategy, strategy. Strategy is the only thing that gets you paid. A working strategy. You can have all the knowledge in the world, and I know traders who have technically traded a decade and never had a winning year. 10 years and never had a winning year. The only thing that gets you paid, exactly, Jose, strategy, which is applied knowledge. So it's not technically knowledge, it's know-how. It's know-how, which is applied knowledge, okay? That's right. But the signals, what are they? They are applied knowledge. Applied knowledge. Strategy. And that it's so important to make that distinction, because if people started learning with that in mind, okay, instead of just learning things to learn, okay, never ever learn things to learn. That's a stupid mistake. Your time is too valuable to just learn things for the sake of learning, okay? There's always a deeper question to be answered from learning. And the deeper question is, how can this be applied to help myself and other people? That's the deeper question. So it's the application of knowledge. You know, if someone would have just sat me down in college before I took my statistics class and said, look, I know this shit doesn't make sense to you, all right? It doesn't make sense to most people that step into this classroom. But, and this was the question, when I was sitting in the statistics class in college, I was like, when the hell am I going to use this? When am I going to use this shit? I hated that class. I hated it. But I wish someone would have sat me down and said, look, I want you to know one thing. What you're going to learn in this class at some point has the ability to make you millions of dollars, possibly per month. It would have piqued my interest a little more. And then I would have taken the class a lot more seriously if I knew how it was going to be applied. If I knew that, you know, statistics is one of the most important things in finance. Okay? Statistics and probability are the two topics that I hope all of you master within the next 6 months. Because that will give you the edge. That will put you in the 10% so quickly your head will spin. Because basically statistics and probability is applied mathematics. It's the applied way of using mathematics in the markets. But I wish someone would have sat me down and told me that. Instead of just learning to learn. Learning for the sake of learning turns people off. It turns their creative juices off if they just force to learn something for the sake of learning. That's good, Scott. I was always a more artistic person. I was always a more visual person. So I always excelled at art, even from a young age. But, that's one way you look at your strengths, okay? So you can work on your weaknesses, but if you're a new trader, you're going to get the most benefit from realizing your strengths rather than working on your deficits, okay? As a beginning trader, foster your strengths before you work on your weaknesses. There'll be plenty of time to work on your weaknesses. But if you foster your strengths early on, that's when you're going to get ahead, and that's when you're going to start developing strategies. And like I said, the strategy and the applied knowledge is what makes you money. That's the same reason why, I'm here with a winning system, and there are tons of guys in MIT that probably have way better math scores on the SAT, all right? Way better logical abilities, but they don't have a system. They don't have a system because they're digging through books because they have to submit a paper to a professor instead of trading in the markets. Does that make sense? And it may take those guys 5 years to learn what I learned in 10 years because they have such a higher mental acumen, but it's still going to take them time, and that's the point. It still takes time no matter what level you're on. It still takes time. There's no avoiding that. There's no avoiding the delay. And that, hence, again, why I created FX Prime, because I don't want there to be a delay for when people want to come into the market and they're going to have to sit down and learn things. It doesn't matter if you have the highest IQ, if you can absorb things like a sponge. It's still going to take time. There's no way to avoid that time. That is the definition of mastery. You've put time into it. Right? That's where the wisdom comes from. Wisdom can't be read. Wisdom has to be experienced. Wisdom can't be taught. It has to be experienced. Not using. Explain the use of not using. You mean explain the reasoning of not using? Well, it all basically boils down to pattern recognition, right? So you're going to spend time looking for one specific pattern. But the fact of the matter is that nowadays, most of the trading is done by high-frequency computers that ignore a lot of patterns. All right? They ignore a lot of patterns. A lot of chart patterns are completely ignored. There are still some that work. And some trading programs actually do use chart patterns as a piece of their strategy, but I would not bank on that. I would not bank on that. Does that make sense? Plus, the very nature of any scanner means you're looking for one particular pattern. But, if we focus on the major currency pairs and there's no pattern there, what do? Just not trade that day? What about all the volatility that's going to be there in the course of that day that does not match your scanner? Does that mean you just sit the sidelines for the whole day because nothing matches your scanner? Every single day there's money to be made in the market in at least one of the currency pairs. So when your strategy is reliant on something that doesn't necessarily fit all the time, then it's not really a useful strategy, if that makes sense. You know what I mean? So those are the three. Those are the three, guys. That's all I got for you tonight. What does the market need? It's basically understanding why the market needs Forex. It's absolutely necessary. Jose's laughing. Plus, let's just look at it this way. I don't see those guys making money. I'll just be honest. You know what I mean? I don't care what it's called. If your strategy doesn't make money, I'm not interested. So it doesn't really matter. Yeah, I mean, the fact of the matter is, and I keep saying the fact of the matter, but it is the fact. If it's skipping trades, then it's not a useful strategy. You know? You may need more than one strategy, but I think, in all, if I don't see people making money, and I don't, all I see, people from that area, whatever that business is called, I just see them trying to recruit people. You know? That's all I see is I see them trying to recruit people. I don't see them getting fired up about the trades. I don't see anybody buying cars off the trades. Percent turn for in a year. Saying, I'm not looking for any particular benchmark because the fact of the matter is that we already beat the benchmarks like in 1 week. 2 weeks ago we had one day where we returned 16% in one day. The highest ranking currency hedge fund in the world last year was 21%. So I wouldn't know where to start with a benchmark if you're beating every benchmark by such a high degree. You know what I mean? If you're beating every benchmark by such a high degree, it's like we are the benchmark. We are the watermark. We basically make our own benchmark. The benchmark is like, what did we do last week? All right, let's try to beat it this week. But yeah, any particular return is kind of like, I looked into it. You can just Google hedge fund currency or currency hedge fund returns. Let's see if there's anything for the first quarter of 2016. What the returns were for the first quarter of 2016. So Barclay Hedge has a good database. If you've never heard of Barclay Hedge, I want to see if you can actually get it for free. There's always volatility in the market, though. There wasn't this past week in the euro, but that's only 1 week, guys. And plus, we'll be expanding to different currencies, which is an update that I'm adding to Prime this week. So I'm trying to find this article from the Wall Street Journal. I was reading the article, trying to figure out what... Scott, you can just Google, what is a hedge fund? It's basically a pool of money. It's an entity that pools money from several investors. In order to invest in a hedge fund, you have to be what's called a qualified investor, which means that you have at least $1 million net worth or an income of $200K per year. They might have raised it. It might be $250K per year. So they're regulated. Not just anybody can invest in the fund. You have to be what's called a qualified investor, which means you can afford to take the risk. It's risk capital, basically. They assume that if you're making $250K or above per year, that you have excess capital. You can afford to take risks of investing in a hedge fund. But all it is basically a fancy word for an entity, an investment entity, that profits both on the long side and the short side because they use what's called hedging. And the hedging, originally the first hedge fund actually hedged their bets because they would take both long and short positions. Nowadays, it's just a catchphrase nowadays because now anything can be called a hedge fund. Would you ever invest in hedge funds? Of course. Of course. It depends on who the manager is. Essentially, the money that's given to hedge funds is given because they believe in the alpha that the hedge fund manager can create. Okay? The hedge fund manager knows something that no one else knows type deal. Kind of like FX Prime. So when you know something that no one else knows, you can charge a very large premium for that knowledge. And that's essentially what hedge fund managers do in the investment world, is they're going to attempt to charge an extremely large amount of money for the alpha that they bring to the table and the decreased risk associated with their strategy. But yeah, Scott, weren't you here when I talked about the book, the hedge fund book? You could, but generally funds are started with no less than $20 million. So, in order to do that full time and to make enough money to where it's actually considered you could be making a lot of bank, you would need a lot of legal. There's a lot of legal expertise involved with setting up the fund correctly. And then also there are a lot of stipulations in terms of the strategy that you can use. You have to have a single defined strategy in most cases. Yeah, you can go on Amazon and just look up hedge funds, and there'll be like 100 books that pop up. Because, there's such a mystique around them. But yeah, I actually interned at a fund of funds for a few years. So basically a fund of fund gives money to the hedge funds. And so the fund of fund that I was working with, they had like $150 million in assets, which is small for a fund of funds. But it was a small fund, and the guy started it because he actually started a bank fund first, and then he took his profits from the bank fund and started his own fund of funds. Yeah, a lot of people claim that Spot, the world's best hedge fund, but they generally, the guys that claim that Spot are generally already billionaires. And they have very large multi-billion-dollar funds. If you guys have never heard of Ray Dalio, he actually lives like 20 miles from here, where I'm at. He's one of the best hedge fund managers in the world. He has the largest hedge fund. I think it's like $50 billion under management. He's a very, very smart, very driven person. He's written his own books on philosophy and investing and finance, and he actually has a video. You can look at it online. Just Google Ray Dalio, Raydalio, and you can look at he has a very basic economic introduction to economic cycles, and it's on YouTube. I think it's like an hour long. But yeah, he's a brain when it comes to... That's your homework for tonight. Alright? Make sense? It's actually a 30-minute video.
How the economic machine works.
So he has a video called How the Economic Machine Works. So you guys should screenshot that. It's actually him doing the reading too. So it's not like a cheapy video. It's actually him doing the reading. But what's funny is that if you go and work at his hedge fund, you have to actually read his like manifesto and his book before he'll even let you work there. He has like an entire philosophical view about how the economy works and how traders fit into the economy and how hedge funds fit into the economy and how everything meshes together, so to speak. So that's definitely a great homework assignment for you guys. If you guys want to screen capture this, I don't know if you can read my handwriting. It's nothing special. Everything that's special is in the application of it. Right? Everything special is in the strategy and the application that's developed from this. Alright guys, so that's all I have for you tonight. I want you to absorb it. I want you to go through the Venn diagram, write down your strengths. Okay, write down your strengths. Start looking at what your specific strengths are and how you can apply that to trading. Start looking at what gets you paid. Strategy. Strategy. What are the components of strategy? Let me see the comments. Start sounding off. Components of strategy. I want to see it. We discuss them all the time. We discuss the components of strategy all the time on this scope. One of the components, what? I talk about it all the time. I talk about it all the time. I talk about it more than anything else. Yes, Scott. Yes, risk management. The most important component of strategy. Okay? If you can't manage risk, you will never exceed or excel in this game. You will never exceed your equity from day to day. You will never excel in beating other players in the game. The risk management must be there. The risk management must be there. What does that mean? That means sticking to your stop losses if you put stop losses in. That means if a trade isn't going your way, you don't sit and watch it. Okay? You don't sit and watch it. And you never ever take trades overnight or over the weekend. Right. No emotion. It's very basic. The components of strategy. See, now you guys are starting to think about it. You're starting to line up your strategy. This has to be, it's like a checklist. This has to be here. This has to be here. This has to be here. And as long as you do your checklist, it's like you're going to take off in a plane. You would not want your pilot to skip a checklist, right? It's the same exact thing when you enter a trade. If you start looking at things in terms of making a checklist, and you never enter a trade unless that checklist is there, okay? You're going to find that you're really going to excel at this game. And I call it a game because essentially that's what it is. It's a game. Well, if you look on the video, was that the first video? I'm making a bunch of videos now. I gave the link to Khan Academy. They have an excellent statistics and probability rehash that you could just look at over and over again. It's all on video. It's free. That's where I would start. Khan Academy, statistics and probability. They have an entire section just for statistics and probability. Very good videos. Very good videos. All right? So guys, listen. My goal is not to force feed your brain with too much information. I think we've got enough tonight to take with us and go deep into the knowledge. Khan Academy, Khan Academy. All right? Just Google Khan Academy. It'll pop up. It's the first thing. It's the first thing that will pop up. Bill Gates is investing in it. So everybody knows about Khan Academy. Jose, you don't know about Khan Academy? Come on, man. You're behind the curve. It was an online trading tool started by Salman Khan, who actually used to work for a hedge fund, as an analyst. He hated it. He quit that job, and he started an online education platform that Bill Gates is investing in. It's free education for everyone. It covers every single type of education that you could think of, K through 12, as well as some collegiate level things like statistics, computer programming, very high level math, and there's probably not a subject that you won't find on there. Jose, we'll catch you up, baby. We'll catch you up. You will learn more in these scopes than you will probably learn in any university. You know that? Definitely in terms of strategy. We'll blow universities out of the water. But I'm talking in terms of knowledge, just pure amounts of knowledge. You'll probably learn more on these scopes. Scott, you've never heard of Khan Academy? Yeah, Udemy is similar. Khan Academy was the first one, though. I'll show you the website. Did I use this? Oh, no. Khan Academy is more about learning. No, it's more of an educational website than a strategy website. All right, if you need a screenshot. KhanAcademy.org. So if you go to subjects, math, you see that? Math, probability and statistics. See it right here, probability and statistics. These are the videos. All right. Jose, did I use it to create Prime? Prime uses math, but I didn't use Khan Academy itself to create Prime. Prime was the result of 10 years of being in the trenches. But yes, does it utilize probability and statistics? Of course. Of course. Everything in trading utilizes probability and statistics, and that's why I'm giving you the resource. To help? No, it didn't help me in terms of Khan Academy itself, but did probability and statistics? Yes. No problem. Probability and statistics are essential to trading, and that's why I'm giving you the resource. They're essential to trading. Psychology can be avoided if you know probability and statistics. That's the whole point. Yeah, the psychology of a trader is basically null. That's the psychology you want, is null. You want no psychological dependency when you're trading, no emotion. Does that make sense? It's the emotion that will kill your account. Oh, that's weird. Wow. All right, guys. So listen, Khan Academy, Venn diagram, and your homework for tonight is How the Economic Machine Works by Ray Dalio. All right? So it's a 30-minute video. Check it out. Everything that I give you is going to make you guys some of the smartest traders in the world. I promise you that. All right? You guys just got to go through the motions. You got to get all this information under your belt so this way it changes how you approach things. Right. Fear and greed only happen when you don't have a winning strategy. Cool, Scott. Very cool. Guys, listen, tomorrow I'm going to hop online at night. We're going to go over the strategy for the week. As usual, we're going to cover the economic calendar. We're going to cover a few good articles. I hope you guys read that article today about the Swizzy and why the franc is gaining valuation compared to the euro. All right? You guys read that? Yay, nay? Right? Is that a yes? I don't see anybody typing anything. Right. Good question, Scott. Because when a country... Yes, that's the article. When a country's currency value increases, it makes it very hard for that country to export. So it hits manufacturing hard. All right? So if manufacturing gets hit hard, then they can't afford to hire people to manufacture things because it's harder for them to send out to export goods, right? If this is China and this is a country that's on the euro, right? And China wants to buy Swatch watches from Switzerland, let's say. The Swizzy. Let's not use the euro, let's use the Swizzy because that's the example. China has to go into the market and buy the Swizzy to actually buy the watches. They can't do it with the renminbi. Okay? They can't do it with the yuan. Does that make sense? So if this currency is appreciating, and does China want to make, like China has to spend more money now because their currency is depreciating while the Swizzy is going up. Right, but it's like you taking a hit. It's like if I tell you you can shop in one state with no taxes versus another state that has taxes, what are you going to choose if you can get the same goods, right? You just go to the state that doesn't charge taxes. It's no different for countries. They don't have, like every country is trying to save money, so if they can save a few $billions by having a depreciating or buying things from a country that has a depreciating currency, then they'll do that. And that's why, like, you know, when Donald Trump, when he was saying that we shouldn't do the trade deals with China, China is constantly, excessively putting money into their economy, so it's depreciating their currency value. So it makes it very attractive for other countries to continually buy and import from China. Does that make sense? So Chinese exports continue to raise. They keep raising and raising. China can just export everything because they keep devaluing their currency faster than everybody else. Everybody's devaluing currency. Does that make sense? Yeah. So if your Swatch, right? Sorry, my phone accidentally started. If you're Swatch and you're trying to export, you know, watches from your country, the last thing you want is your home country's currency to continue bumping up. Yeah. That's what it is essentially. Strong currency is a strong economy. But you don't necessarily want your economy to be so strong that you can't export goods. It makes it harder for you to export if you're a manufacturer. Does that make sense? So anyone who's in manufacturing does not want that currency to go up. To have massive deflation. Not necessarily, although massive deflation is already occurring in wages. But, you know, the fact of the matter with currencies in the U.S. in particular, right, the U.S. particularly does not have any real manufacturing. I mean, you know, these glasses, they're made in China. I love them. Warby Parker, but they're made in China. Why? Because there's no good-looking U.S. glasses. There's none I can find. Why do you think that is, though? It's because there's nobody in the U.S. manufacturing it. Right? I mean, we need to have actual companies manufacturing things to actually buy stuff domestically. When you have... It's just business. It's just basic business. If you can make these glasses in China for 10 cents and it costs $1 to make them in the U.S., why not make them in China? No, the value is still going up. Appreciation and increasing value is the same thing. It just makes it makes exports from that country less attractive to other countries. So in terms of international trade slows down. Make sense now? International trade slows down if your currency appreciates as a country. So there's a lot of manipulation there, right? Central banks can just tilt the scale in favor of making your exports more attractive. It's already affecting the euro, Scott. It's already affecting the euro because people are going out of the euro into the Swissy as a hedge because they want to de-risk. If large companies own a lot of the euro, Switzerland is notoriously a very neutral country, and their currency can be exchanged readily with other currencies pretty easily, just like the US dollar. And so what we're going to see is that the euro over the long term is going to decrease. Because people will not want anything to do with it. You know, you'll have to go out on a very large time frame chart, you know. But let's go back to 2011, where the euro was almost at 150, right? In 2011, and since then it's gone down every single year. And now we're at 1.14. It used to be at 1.5. So a 40-cent devaluation over the last 5 years, and it's going to continue. It's probably going to reach parity with the US dollar pretty soon. That's been the talk for the longest time, is that the euro and the dollar will have even exchange. And if other countries start leaving the Eurozone, the European Union, it's likely to reach that very quickly. All right? You would think that, right? They're exporting more, but it's kind of a catch-22 because all the people that are saving in your own country now have less money, right? Because their savings are worth less. So it's not necessarily a balance because your own country is kind of eating the wealth, its own wealth, to gain those exports. So that's talking about trade deficits versus other countries and stuff like that. You know, the trade deficit is not the reason why the economies are having trouble. It's the massive creation of debt. Everybody, they try to say, oh, it's the trade deficit with China, it's the trade deficit. Well, no, not necessarily, because they have a lot of economic output. So they're gaining economically. But they have a lot of debt on their books too. Everybody has an insane amount of debt. China has entire towns that have been built with not one person living in them. Look up Chinese ghost towns. Google Chinese ghost towns. So, all right, guys, I'm going to hop offline. I got a lot of work to do tonight. I gave you guys a lot of homework. All right. Look at the Ray Dalio video. Do your Venn diagram. Yeah, there's a lot of meat and potatoes in that. And like I said, that's why... No, China lies about a lot of their statistics, so you can't really go that far. China lies about everything. So you can't really go that far. Which article link? It's on one of my past scopes. It's on the last scope, actually, on my Catch account. I think I already took it down. I already read it. Yeah, Summer of Pain, Switzerland into Bloomberg. Just go to Bloomberg and type in Summer of Pain. Yeah, that's basically what it talks about. Alright, guys. Do your homework, and I'll catch you tomorrow night. If you guys have any issues, just give me a shout. Give me a shout. You have my my email, right, guys? No problem, Calvin. For you guys that are members, between tonight and tomorrow, I'm gonna add. Thanks, brother. I'm going to add a couple videos to the back end, and you guys are going to definitely want to catch those before we scope on Sunday, okay? So you guys have a great night. Thanks for hopping online on a Saturday night. I'll see you tomorrow. Take care.